Welcome to today's market recap, and thanks for joining. In today's session, I will demonstrate a swing trading technique that you can use in any market condition to identify truly high probability and low risk 360 degrees trades. I will use only one trading system for the complete analysis, Q. It runs on Metastock and TradeStation platforms. Q has multiple components covering market, sector industry rotation, fundamental, technical, and even seasonality analysis, all done in 100% real time. I will use several of them today. Q was designed by Sagar Nandi, an active trader in multiple markets. You can learn more about Q systems from the Learn page on the website superiorprofit.co. For your queries, you may use the email ID tradingprofitably@gmail.com. Follow me on X handle Superior Profit for live market and stock analyses, all shared before knowing the results. And visit and subscribe to the YouTube channel Trading Profitably to watch detailed market recap, masterclass, and many other videos. Disclaimer: this demonstration is for educational purposes only. Sagar Nandi, I or superiorprofit.co are not investment advisors. Nothing in this presentation is a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options, document from Options Clearing Corporation, to decide if options trading is suitable for you. Now, I will use Q systems to carry out market analysis across 5 distinct non-overlapping dimensions. If all the dimensions are aligned, say bullish, the decision is easy. That is the preferred trading direction. If the dimensions are showing divergent insights, you may do one of two things. Either stand aside or swing trade in both bullish and bearish directions in different stocks. Which option to choose depends on balance of evidence from the dimensions. If you are not sure, you can always stand aside. Once I derive the preferred trading direction, I may look for high probability and low risk trade candidates in that direction. First dimension of our analysis is to look at 2 instruments, US dollar and Mega Cap Custom Index, that have tremendous influence on the market. US dollar tends to be inversely correlated with the market, though sometimes that inverse correlation does not work. Mega Cap Custom Index is directly correlated with the market, and that correlation always works, with more impact on some pockets of the market than others. Dollar Index. In the last market recap, I showed that Dollar Index had created triple bottom. That bottom is still holding. For the last 4 weeks, it is moving practically sideways. The daily trend line support is holding, if it can go above the high of all these candles. In daily, probably, it will make an attempt to go to the previous trend line resistance. The white direction line, 200-day moving average, is also there. You can see that it is also inside a triangle pattern created by trend line resistance at the top, trend line support at the bottom. If it breaks below the trend line support, that will be bearish. And if it goes up, breaks above the high of the previous few candles, I think that will be bullish, and it will probably at least go to the trend line resistance above that. As of Friday's close, it is indecisive. I'm neither bullish or bearish at present. Mega Cap Custom Index. Though last Friday was bullish, in the market recap that time, I mentioned that overall, Mega Cap Custom Index was looking weak. That was useful analysis. This week closed with a doji-like candle. Relative performance is still tilting down. It is underperforming the market. Friday's candle shape is indecisive. If it can break below the trend line support in daily, that will be bearish. If it goes up from here, it will likely find resistance at the yellow direction line, which is the 50-day moving average. Therefore, it will not be easy to buy mega caps even if the custom index starts to go up next week. I'll watch to see whether it is breaking below the daily trend line support or breaking above the yellow direction line to decide my next trade in mega caps. As of Friday's close, I'm indecisive. Second dimension of our analysis is using Q market breadth, internal health check. Usually, the market follows the internal health, not the other way around. Market breadth, total view, the broadest view of the market. For the last 5 days, the total view custom index practically moved sideways. The yellow line percentage of stocks above 50-day moving average slightly tilted down, but not much. We had one Hindenburg on Monday. Where did it come from? Let's find that out. Market breadth of NASDAQ and NYSE. The Hindenburg came from NYSE, which is still outperforming the market. How did we see that in the last market recap? I showed in the last market recap that in NASDAQ, percentage of stocks above 50-day moving average was around 40%. This week, it slightly came down. In NYSE, the same percentage was between 60 to 70%. That also slightly tilted down. Overall, this is not giving any clear picture. It's neither bullish nor bearish. What is outperforming? For that, let's go back to the total view chart. The cyan line, small cap versus large cap, is practically flat. Therefore, there is no preference between small cap and large cap. And for practical purposes, growth versus value is also looking flat. So there is no pocket of the market in terms of market cap or growth versus value that is outperforming or underperforming. The so many Hindenburgs that came earlier and the one that came this week, those are concerning, but other than that, we are not able to decide preferred trading direction from market breadth charts. Third dimension, market external view. This is how most people around the globe see the market. This analysis can be done using market ETFs, futures, or indexes. I will carry out this analysis using Q at a glance weekly daily charts. SPY. In the weekly, it has a doji-like candle. It is moving inside a narrow range. The daily is also inside a range created by trendline resistance at the top, trendline support at the bottom. It is right in the middle of the range. That is a no trading area. SPY is very indecisive. QQQ, looking very similar to SPY. Weekly has a doji candle. Daily is inside a range. It's also inside a wider range. QQQ is indecisive. DIA. Here, unlike QQQ and SPY, the weekly candle shape is bearish. It is not indecisive. However, it is very much in an uptrend. Friday has a doji candle, and it stopped right at multiple trendline support. If those supports break, then I'll be bearish on DIA. On the other hand, if the supports hold and price can go up from here, which will mean that it is going up from the yellow direction line, the 50-day moving average, then I'll be bullish on DIA. It may give a pullback long setup if it can go up from here. IWM. This is also indecisive in weekly. The candle has both upper and lower tails. Friday's candle is also indecisive, and it stopped right at the trend line support. If that support can break, then I'll be bearish on IWM. If it goes up from here, I'll have to wait for it to clear the trend line resistance before I can be bullish. As of now, IWM is indecisive. Our fourth dimension analysis is about sector industry stock breadth using Q-Edge. It shows the sector industry scorecard in real time and allows easy drill down to strong fundamental stocks. It also has bucket analysis, which pinpoints reversals with remarkable accuracy. Bucket analysis. 52% of stocks in S&P 1500 are above the mid-Bollinger Band. That is neutral. Sector industry stock breadth. From 1 month longer-term view to 10 days to 1 day, the bullishness reduced became more red. However, this week, 5-day period is more or less neutral, and that neutral nature is remaining over 2 days and 1 day. Sector industry stock breadth is also indecisive. The fifth and last dimension of our market level analysis is technical breadth using QFinder. Most of our trades are directional trades. For such trades, we profit by buying stocks going up or shorting stocks coming down. Technical breadth helps by showing the overall posture to adopt, bullish or bearish, and allows easy drill down to find low-risk trade candidates in that direction. Weekly technical breadth. Overall, it is bearish. That allows shorting. Daily technical breadth. This is also overall bearish and bearish across all the categories, including momentum. That allows shorting. Based on the analysis of the 5 dimensions, we are now ready to arrive at the most important trading decision. That is whether and where to buy or short, or whether to stand aside to decide the preferred trading direction. Combining the 5 dimensions to arrive at a conclusion. Dollar index indecisive, mega cap index. Indecisive. Market breadth, Hindenburgs are concerning. Other than that, indecisive. Market external view, indecisive. Bucket analysis, indecisive. Sector industry stock breadth, indecisive. Technical breadth. This seems to be the only dimension that is not indecisive. It allows shorting. Last week was neutral across most dimensions except a few, which allowed buying. This week, it is flipped upside down. Most dimensions are now neutral except technical breadth, which allows shorting. Considering that and the current geopolitical tensions, I would like to stand aside. I'll watch how the market moves next week before taking my next trades. Review of trade ideas shared earlier on YouTube or X. I regularly share live market analysis and trading ideas on YouTube and X, always before knowing the results. You may subscribe to the YouTube channel Trading Profitably and follow Superior Profit on X to receive the analysis and ideas in real time. In the last market recap, I shared only one possible buying idea, Dropbox, DBX, and I mentioned I was not holding any position. I tracked the stock this week. This was Monday's open. It failed to go above the early range high. I did not buy the stock. On Tuesday also, it failed to go above early range high. Wednesday went above early range high, but the previous day's close pivot was very nearby. I waited for price to go above that, but it did not do that until later in the day. That was too late for me to enter the trade. On Thursday, I kept an eye on the stock again. And on that day, it decisively broke above the early range high in the morning session. I took a long position at that time. On an intraday basis, my stop was below early range low. That was never hit. Instead, it went up enough to cover the risk distance. I had booked partial profit at that time. Later on, I noticed that the stock was pulling back. I did not hold the remaining position. I closed the remaining position with a trailing stop. On Friday, I was watching the stock again. It went above early range high decisively, and I took a long position again in the stock. My stop would be just below the early range low. Because the previous day's low was nearby, I decided to put stop on an intraday basis just below previous day's low. The stock did not approach the stop. Instead, it went up and it covered more than the risk distance. That was Friday's close. So before deciding to hold the position, I looked at the stock's daily and weekly charts. This is the daily weekly. The weekly was closing with a doji candle. And daily was closing below a newly created trendline resistance. Looking at that, I closed the entire position with a profit on Friday. That is how I traded DBX for 2 days in a row when it was going above early range high using precision entry chart template, and I made a profit on both days. What about now? My overall market preference is to stand aside. However, this stock is looking quite all right. It is continuing to hold the double bottom with a false downside breakout in weekly. And in daily, we had the Q possible reversal signals, bullish headwind. The low of those candles are also holding. Only thing that is on my way to taking a new bullish position is the trend line resistance. If the stock can break out of the trend line resistance, I'll not mind attempting to buy the stock once again. This week's trade ideas. Am I going to share any trading idea this week? As you saw, my preferred trading direction is indecisive. I'd like to wait and watch. Normally on such a day, I would not share any new trading idea. However, today is a bit different. Let me explain how I bought a stock on Friday. I'm not sure if it will gap up on Monday. If so, it may not be a viable buying idea on Monday. But on Friday it was, and I identified it using real-time 360 degrees analysis. Let me explain how. As always, QEdge was running on one of my monitors on Friday. And as we already saw, Friday's sector industry stock breadth was mixed to slightly bearish. However, I also noticed at that time in real time that the energy sector was up, and it was the best performing sector. What would I do then? I would drill down to the sectors, and you can see the energy sector at the bottom. It was the strongest sector, and it was remaining strong for quite a while. My next step would be to drill down into the energy sector's industries. And remember, I'm doing all this in real time. I would then click the green button to identify the energy sector industries that were either the strongest or most accelerating. Let me do that. I'm left with only these 4 industries. With another click, I can drill down into all the stocks with liquid options. This was the list of all the stocks with liquid options, and I filtered for the strongest industries in the energy sector. All the stocks were up. I used the smart filter buttons to look for stocks that were start green at least, meaning they were either undervalued or with high earnings growth in the last quarter. Let me do that and see which stock came to the top. That was a R. That is how I found the stock. My next step would be to generate the 1-page scorecard for the stock. Let me do that. This is the scorecard. Undervalued stock. With high earnings quality. A short squeeze potential. Funds are accumulating. Near the close on Friday when I was doing this analysis, the stock was up by more than 7%. It's a profitable company. Earnings per share is positive, whichever way you look at it. And on a mixed to bearish day, 93% of peer stocks were up, so the industry was bullish in itself. How was this specific industry scorecard? I checked that out again. I went back to industry scorecard in QEdge. Oil and gas exploration and production was one of the strongest industries, and it was one of the most accelerating as well. I liked that. So I found a stock in real time with perfect top-down analysis that was in one of the strongest, most accelerating industries with robust fundamentals. My next step was to look at the technicals. Here are the technicals using weekly daily charts. It gave a very clear breakout long setup. Broke out of the trend line resistance in daily and also broke out of the trend line resistance in weekly. The weekly candle shape and color were very bullish. The daily candle shape and color were also very bullish. It had big move, the parent of all bullish momentum signals. It was coming out of a squeeze with many HGSI-like momentum signals. Mobile breakout. Kahuna and Bongo. And see this 6 count. This was indicating that it was having at least 3 HGSI-like momentum signals and at least 3 Q momentum signals or directional forces. So on a mixed to bearish day, this stock was giving a buy setup, and I took a long position in the stock. Again, it happened to be in the energy sector. At that time, the geopolitical heating up did not occur yet. Because of the weekend geopolitical situation, it may be that the stock will gap up on Monday. And if it does that, I will not let it turn into a loss, even if the stock gaps up and starts to go down. On the other hand, if the stock gaps up and continues to go up, then I will not be in a hurry to close the position. That was an example of how I found a stock in real time using Q systems only. Applying the top-down analysis, and I took a long position. If you carry out the 360 degrees analysis using Q, you will most likely find many trading candidates today, just as you would almost every other day. Now that you have seen Q in action, it is over to you to benefit from that. I will end today's session here. I look forward to seeing you in my next session. Have a great day. And as I always say, as the live examples show, there is no reason not to do that. Trade profitably. Thank you.